In this video, I'm going to go over one of my favorite indicators. It's a meme reversion indicator called the Stochastic indicator. And it's one of those indicators that I like to use to know how much longer to hold a trade, and also when a meme reversion is likely to play out. And that's what it's predominantly used for. Now, my success with trading has come from using the stochastic indicator on a multi-time frame point of view. And some of the most successful or profitable trades have been when I've actually sized up, because I have confluence on multiple time frames with all my other systems that are involved in this program. And it will take you 12 months to get to that point. That's what it took me trading the one system, just trading one system and trading one system well, because becoming consistently profitable is very difficult. So for me, the multi-time frame point of view, having a longer outlook on the market while doing shorter term time frame trades, has been extremely beneficial. And the stochastic indicator is a major element of my strategies. So let's just pull up stochastic. Now, you don't need to use necessarily the one that I use. You can just use the standard free one. And we'll just double check the settings. This should be on 3. Should be 14, 3, and 3. We'll keep it to the chart time frame for now. The style, this is preference. I'm going to put it on a little bit thicker so it's easier to see. These are the colors that I like to use, not for any reason other than that's what I like. It's because I use the yellow and the purple for the trend lines, and I like to use white for support and resistance lines. And I just like to keep stuff generally simple. Now, we are on the 5-day indicator here, and the 5-day stochastic, we're on the 5-day chart, and the 5-day stochastic is my favorite time frame. So I'd put this in here as a purple line, and I'd put this where it crosses, that is, as a yellow. I'll come back. Actually, let's just do the cross downs first. That's crossed down there. It's very difficult here. You got to do it after the fact. You can't do it in the moment. That'll do for now. I just want to show you the power of this stochastic, because if you were to trade this and this alone, you'll do okay. This is the 5-day. So most people generally aren't prepared to hold positions that long, or they get flushed out. So if you were simply to buy down here when it's low and sell when it's high, that's a profitable trade. Vice versa, short, buy. So that would be a profitable trade. Repeat, buy, sell, profitable. Sell, buy. Arguably, it is profit, but it's very minimal. But then you flip. So then you're straight back in, buy, sell. Now this one here, it's not quite. So you'd be buying in after that close. So it would have been on the start of this candle right here. And you'd be selling when it's flipped, which is up here. So this one's a loss. And then you're buying here and selling here. So this one's very close to breaking even. But if you then sold, you're waiting for this to cross back over into a buy zone. And it hasn't done that. So at this stage, pressure still remains to the downside. Now, where this becomes quite useful is if you're on the lower time frames. So those bars are going to remain there. So just show you that pressure is going to be to the downside. And at that stage, if you were using your lower lows, your higher highs, on this particular chart through there. That's the high, and this is your low band. Once that purple indicator's kicked into gear, with the stochastic 5-day indicator down, at that stage, I'm on lower high watch. So that's what I'm predominantly doing, and that's how I trade. I'm trading with the momentum of the 5-day stochastic as being the meme, and I am at that point, I am looking for lower highs and lower lows. We come back here. I don't know if that's at that particular time, I would not know what that is. So I would most likely not have traded it unless my EMAs have told me to. But this one is. So at that stage there, you've also got the 2-hour stochastic topped out. So if I just trading this as a strategy by itself, that would be an entry point for me, because I would put my stop there. I know that's a low there, so that's a risk reward of 1.7, but I'd be using my fibs and I'd probably be coming down. Now, my trading strategy involves the EMAs, and I'm going to go over that in the strategies and how it all comes together. But I want you to showcase how I use the stochastic on multiple timeframes to influence the direction that I'm going and what I'm looking for on these lower timeframes. You could argue that as soon as the stochastic gets down to the bottom on this 2-hour chart, that you would sell, and you can do that if you want. Like I said, I'm a swing and momentum trader. So for me, I tend to go in heavy at the start and then slowly edge out of the position. And then if I believe there's a lot of strength, I can then fully buy back in at some stage. So for instance, without even looking at my EMAs, this here, being the support line, has then become the resistance line. At this stage, with that bar, that one there, that's high. And look, you could argue that this one is as well. So at this stage, I'd be saying, okay, if the prices come down here and then it's retraced back up to here, I would not be closing my short position if the stochastic indicator on this time frame is already back up here, knowing that it's also a potential lower high. I don't know if it's a lower high, but I know it's a potential to be. And the stochastic indicator to me looks like it's overbought. So that would be saying, hold the trade, hold the line, I like to say. And I'm referring to my EMAs, but in that particular situation, I'd sleep more than comfortable knowing that that's likely to still keep coming down. The moves on the 5-day stochastic are often the largest at the beginning. So for instance, that first little move up here on this 5-day stochastic, it's in the first couple of bars. Same here. This one was a cross down, but it's gone in the opposite direction. This one here was quite quiet. This one here, pretty much most of the move was in that first bar, and then it's just flattened out. So yeah, this one's the opposite. It's actually going to continue on down, and we know that. So I'm sort of, cherry picking here. But I just want to show you how I use the stochastic, and I'm going to show you how it gets implemented into the script. A very important thing to note is that when you're using the multi-time frame point of view for systematic trading, you can't have two charts open at the same time like I do on this one. This is my trading system, and that's how I basically started it. But you can't do that, for instance, when you're doing the automated trading. So what you can do, and what has been coded into the script, is a multi-time frame. So this one, the CM Stochastic Multi-Time Frame by Chris Moody. This is the stochastic indicator that can be used for multi-time frame analysis. And that's similar. It's not the same, but it's similar to what's coded into the systemation key. Now we'll just make these colors full bright, just like I had before. We'll stay consistent. And drop all this off because it's just noise. Can leave that on. The upper line will go white. Go white. Okay, that'll do for now. I don't want those background colors there. Okay, so on inputs, it says here, use current chart resolution. And we've got 14, 3, and 3. Now, if we drop that off and we can put this onto the 5-day. On the 2-hour compared to the 5-day. But the way it's working, the way the stochastic indicator works, that blue cyan line, and it's the same in this one, that's the K percentage. So stock K, and the purple is the stock D. And this one will stay the same. It's the K percentage and the D percentage. So the way the systemation key works is that the K percentage needs to be above the D percentage in order for it to take a position to be a long, or in this case, in order for this to be a short, we can use the stochastic indicator on the 5-day chart in confluence with EMAs on this chart for it to take a short. So it can only short the market, for instance, if we were to set it up this way, when the blue cyan line here is below the purple line. Now, the way it works on the close. It cannot work during this period. So it's unable to take a short because it's on a 5 time frame delay in this period because the blue cyan's too high. It can only do it once this period has closed. That has to close and then it can. That's how it works. So that's where it closed. At that stage, we're on that lower high watch. You could argue that the 2-hour stochastic is adequate, and that's where you want to short, and you let it play out. You can be using your EMAs, whatever you want. I just wanted to explain how the multi-time frame indicator works and how you can visualize it, because it doesn't plot on the chart in the systemation key. You need to plot it manually with this. So we can change this, for instance. The 3-day also works really, really well. The 3 and the 5 for longer term views are extremely good. The 3 is just that little bit more aggressive. So as you can see, the blue cyan's there. So then it could have shorted from that point forward. Yeah, so we're looking at a 3-day stochastic indicator here, and then we're looking at the 2-hour above it. To give you a little bit of market psychology here and how I sort of look at the stochastic, as you can see, this 3-day chart, this has gotten low. It is entering a buy zone area where it's oversold. So I'm seeing this as like a steam train, and it's gotten to the bottom of the hill, and now it's sort of leveling out. And if this turns up, we've got a solid play on our hands. Now, at vice versa, the 2-hour is coming down. So you would expect this short position, if there is one, to come down. How rapidly it comes down, I'm not sure. But what I'm saying is, I don't think that at this stage, Bitcoin's got a heap of fuel left in the tank to keep pushing lower. I, going on my stochastic indicators, this being the 5-day, we'll just drop this one for a sec because, or we'll just turn it off, just pull it down. Because there's only so much, I like to think of it as fuel in the tank for the train. So it's only going to be able to push up here for so long, and it runs out of time and momentum, and then it comes down. I find this an immensely powerful tool, and I'll just show you one more thing that I have, which is one of my favorite methods of using it because it's so simple. This is the 2-month chart with the stochastic indicator, and it has predicted the tops and the bottoms reasonably well. And as you can see, we're not in the overbought area yet. So, arguably you could put a trend line through here and say, oh, it's not going to get as high. But it's only technically had 2 touches, so you can't sort of say that is the case. Trend lines on this do work. Just I wouldn't be using it on something this higher time frame. But yeah, as in terms of working out when it's a buy and when it's a sell, just for market, you can see what's been happening. The stochastic indicator for me is extremely helpful in knowing how long to hold a trade because we're in a short or long position. For instance, the 3-day is quite good. It's a little bit faster moving than the 5, and yeah, all fib numbers seem to work really well, just to be honest. The weekly is just a little bit too slow. For instance, I find it's just a little bit too slow. It's just not. It's not. It just hasn't got its finger on the pace. As when it's in the extreme zones, yeah, sure, it's not bad, but it's just for trading. I don't use it. Now, the 3-day I find to be a little bit more powerful, and you can adopt the same method I said with the 3-day as you can with the 5-day, where you sell, you buy, you sell, you buy, you sell, you buy. You get the gist. So another way of looking at it is seeing this as like a steam train, and I've used this analogy before, but it's getting to the top of the hill and it's only just going to make it. It just doesn't quite have enough grunt to keep going. So at that stage, it's had a big move up, and then that would be where it just doesn't quite have enough to just keep going. It wants to come back down. And as you can see, it does flip-flop around here a little bit. But effectively it does come down, even though it's only a short stay, and it's still setting up as a higher low on the 3-day chart. So let's turn this on. Let's get into inputs and let's just go through this. We'll turn this on and we'll put this onto the 1-day. 14, 3 and 3. We'll leave the EMAs on. So what's happening at the moment is it'll only take a short position. Oh, I think this is set up in long. Just change it to short. It'll only take a short position if this is purple plus the, I'm just going to double check this, 1-day. And stochastic setting time frame 1-day. So the stochastic setting is on 1-day, and the EMAs also need to be purple. So it'll only take a short position if that's the case, and it will close when the EMAs cross back over. That is how the multi-time frame works. Now, it doesn't plot this stochastic indicator on the chart. So yeah, feel free to grab it if you wanted to. And yeah, that is effectively how the multi-time frame stochastic indicator works in the systemation key. I'll go over more details on how I use it within the strategies I use, and it's a very powerful tool. There are multiple different strategies you can adopt with this, and like I said, if you're manually trading, you can use this purely as a method on knowing how long to hold that for. Oh, one last tip. If you're using this and you're seeing that, okay, I've got the yellow EMAs here have crossed to the upside, so it's now looking for a long position. You're like, oh no, I'm on the daily chart. I don't know when this is going to change back over. You've got two options. You can just simply go to the daily chart and it'll tell you that it's going to swap over in 1 hour and 38 minutes just here. So that's when it'll print this as being a potential long area, for instance. Your other option is to put on a stochastic that just matches the time frame that you're in, which is what this one here is. So this is your longer time frame one, which is on the daily, and this one as well. I just don't think it's got the same settings. 3. So if we were to go back to, say, the 2 hour, there you go. So on this particular setup, you've got the daily, which is going to print soon, and then it would be able to take a long position, but the 2 hour stochastic indicator is pointing down. So if you were going to long this and you were doing it manually, obviously this is going to be facing up, and if you're using the 2 hour time frame, I'd be trying to get this 2 hour time frame down here, because if it's up here, it's likely to have a little bit more pullback before it goes. That's not always the case. If you swap through the different time frames, or the 1 hour's overbought as well, don't worry about the lower time frames. If you're already in the 2 hour, you're in something that is the same. The 4 hour is quite powerful as well. So that's heading up to the overbought region. 5 hour, just in no man's land. The 6 hours still turning up. The 8, the 12. So the 12 hour is already up. So people who were buying here on the 12 hour had it pretty much nailed. And the daily, not quite there, but it will be on this close. But yeah, going back to timing your entries, depending on what time frame you're trading, this 2 hour would indicate that there could be another pullback before this goes, especially if the 1 hour is also up there. That can only hold for so many hours in that overbought, oversold region. This 2 hour chart here, you can see it's been oversold for that long period, and same here, whereas it doesn't happen on the high time frames for as long. This video has taken longer than what I wanted, but I just want to emphasize that using the higher time frame stochastic indicator in confluence with your lower time frame stochastic indicator and your market structure and your EMAs filters out a lot of the noise that you'll see. The 5-day and the 3-day, for instance, are brilliant for working out how much longer you want to stay in the trade that you're most likely in, because once you've been trading this system for a while, you'll realize that there are times when it's just getting overbought and oversold, and you'll be looking, because you've been trading this system, so you're already in front of it, so you'll be looking for that next trade before you've even closed your current trade.